morning, everybody. I'd like to tell you about Koine and what we've been doing and what we've been looking at. And it follows on very much from the presentations this morning, because we're really looking at this from a perspective of as the whole ecosystem is starting to mature and moving on. And it's been really fascinating looking at what's been happening in finance over the last 10 years. And I'm just moving out of that light. 10 years ago, we had the massive meltdown, and so much has happened since then. And I think everyone here, knowing this audience, will be very familiar with the crypto world, you know, from 10 years ago when Satoshi wrote her first white paper to how it's grown. But what's happened in that time is the volumes we've seen have pretty much been driven by the retail world. So the retail world have very different requirements, concerns to the investment, the institutional world. They're much more comfortable taking different types of risks. They're more comfortable with lack of regulation, a little bit more comfortable with lack of governance. And as this market matures, a number of people have referred to this already today, that needs to change, it needs to evolve. What's quite clear is we do have institutions looking at this area. They're starting to put the toe in the water, and I think that's actually the expression that was used earlier by one of the speakers. So they're starting to do that, but it really is a toe in the water, and there are quite a number of things that are holding them back. And what I'd like to do is to look at what are those things, why are the institutions starting to look to put the toe in the water, but not necessarily having the wholehearted movement to go into this asset class. And we're going to go through each one of them in turn. This is a little clip I took from Bloomberg, and I wanted to put it up because it specifically talks about how the West was won. And I don't think that's necessarily a great expression, but what it does do is it talks about how things have moved so quickly, and in doing that, how there's been a need to move quickly and in a way that now, as the market matures, there needs to be a period of stability and looking at what needs to be done to really move this. Because I think the fact is that, by and large, this asset class is an interesting one, but it's not quite at the institutional grade yet. And if we're looking at what that means, there's two key areas. One is around peace of mind. So for the institution really to become committed to the digital world, to the crypto world, they need to have a couple of ticks in boxes that aren't quite there yet. And I've made this, not sort of crosses and ticks, and I realize that this is a very extreme version of doing that. But by and large, I think it's fair to say that regulation isn't at the level that we need, and there's been loads of discussion around that. Governance, by and large, governance isn't at the level that institutions need to see it at. Security of assets, we're going to talk about that, because we're talking big amounts of money that institutions are looking at, and they need to know that when they go into this asset class, it's safe. Security of settlement, when they're trading, they need to know that those confirmed trades will be settled in the way they would expect them to be settled. So these are all absolute requirements, the sine qua non of this world from an institutional perspective. In addition, of course, there's market viability. We can have all of these fantastic safeguards, but unless there's liquidity that institutions, particularly some of the high-frequency traders are looking at, but everyone needs liquidity, and that's been touched on as well this morning, the need to see an increase in liquidity. So let's look at what each of these mean. Regulation. I think this is the one that's been covered so much already, but what's clear is that we need to have regulation in place so that investors know that if they get involved in this, they know what that means. They understand how they'll be protected. It will bring stability to the market. They want to know that what they're doing will be covered by law. Governance. It feels that there's been quite some oversight of the whole oversight world. And for the institutions to really get into this asset class, this is something that there can be no compromise on. They need to know that the organisations they're working with have the right level of governance. That means that they have auditors, that everyone knows who they are. They're publishing their audited accounts. They're meeting all of the requirements that they need to meet. They're operating as professional organisations. They've got the board scrutiny that they should have. They have the risk committees that they should have. They're meeting all of the KYC, AML requirements that they should have, and we'll talk more about those. They were alluded to earlier. This is a non-compromise area. For institutions looking to invest in this world, they need to know that they're dealing with other organisations that are clean. And then settlement. In this world, it's really important to know that when you have a confirmed trade, that you're going to be certain that that confirmed trade will be settled. And there's a number of different things in here. You do want to know that the organisation that you're trading with is a clean organisation. You don't want to be trading with other organisations which have either got coins or they themselves, for whatever reason, don't meet the requirements that they should be meeting. So that's so important. So real certainty about the counterparty that you're trading with and you're settling with. Also the settlement of the settlement itself. Not only that the organisation you're trading with is clean, but the coins are clean, and once you have a confirmed trade, that you will actually receive the settlement. You'll receive the coins that you believe that you bought. And ideally on a DVP basis, delivery versus payment basis. That's so important. You'd expect that in the fiat world, you'd expect it also in the digital world. And speed really matters here, particularly as we move into a much more mature market where we're seeing high frequency trading going through. But speed matters anyway. You want to know what your trade, that your trade has gone through, where you are, what's actually now in your world. And then custody. So this has been referred to a number of times. Two key things here. One is segregation of duties. This is so important because for institutions, many institutions simply cannot keep their assets within an organisation that they're interacting with in another way. So for institutions, oftentimes they'll find themselves with the real issue of where to keep these huge assets. It needs to be somewhere safe. Oftentimes people will keep their assets on exchanges. If you're dealing with that exchange as a counterparty, from an institutional perspective, you're not going to be able to do that. You have to have segregation of duties. So it needs to sit somewhere else. Where to put them? They need to be somewhere safe. And oftentimes people talk about the 3 rules of custody, which is don't lose your assets, don't lose your assets, don't lose your assets. What do we mean by that? It needs to be somewhere safe. The technology needs to be absolutely as safe as it possibly can be. There needs to be insurance behind that in case something does go wrong. And you also need to know that not only in case something goes wrong is there going to be some form of hack, but in case the custody organisation that you're working with becomes insolvent, you need to know that if that does happen, then your assets are going to come back to you. There's no regulation here just now, so you need to know that there's some form of legal construct behind you. So custody, I would say, is probably the single most important thing as institutions look at this space. And then that's the peace of mind, liquidity. It is the lifeblood of markets. So in order to operate in this space, what's really important is that you know that there's liquidity. And it's very interesting, 36% of traders, over a third of traders have confirmed that their phrase here is upset. They're very uncomfortable with the liquidity that exists today. And of course, the way to deal with that is to get more liquidity into this asset class. So Koine. Koine's really been focusing on this area. So not from the perspective of what does it mean for the retail world to trade. It's really looking at how do we help this already growing, but still early day asset class to become suitable for the institutional world. And it means working very closely with the institutional world and also the exchanges that exist today, and looking at how can we help both of these sides to really seize this opportunity and to take away the issues that exist today. So we're looking at combining traditional financial discipline and rigour with digital agility. And in doing that, our focus has been on that area and only that area. It is an absolute focus for us. The team that we've pulled together, the board that we've pulled together are people from the world of trading, of payments, of financial services, people who are used to running market-critical organisations and understand the requirements of the organisations that we're looking to work with. So what do we offer? It's very much focused on the two aspects of this world. Somewhere safe to keep your assets and a safe way of effecting the settlement once you have a confirmed trade. So somewhere safe to keep your assets, that means putting your assets into custody with an organisation where you know that once they're there, they'll be kept in a safe manner, and if anything does go wrong, that you have the full protections that you would expect to have, that you, this committee, would expect to see. Way that Koine works is organisations, be they on the institutional side, funds, wealth management, exchanges, whoever wants to keep assets with us for safekeeping will transfer their assets over to us, we'll store them in our cold vault. The legal ownership will be transferred to Koine, and in exchange we will generate tokens, and those tokens can either be held with us until you want to withdraw, and you can withdraw assets at any time, or you can use them when you're trading with exchanges within the Koine ecosystem. We will receive confirmed trade instructions from our participating exchanges, and based on those instructions, we'll make sure that the settlement goes through on that DVP basis. So we're taking away the risks that exist today in terms of holding on to assets and in terms of the settlement. And in doing that, really helping to drive this whole asset class in quite a different way than exists today. So very much complementary to what's happening in this digital asset world today, but thinking of it from the perspective of what do we need to see happen from an institutional perspective. So everyone in the Koine ecosystem will have been fully onboarded. So going back to the questions about what does that mean from an AML perspective, we take that incredibly seriously. The focus for us has absolutely been on making sure that everyone who's participating in this world has been thoroughly vetted. We are not interested in working with an organisation that we are not 100% certain is completely clean. And those checks continue on an annual basis for the actual institution itself and on a post-trade basis for each transaction going through. So we'll have thoroughly vetted the organisation, and assets coming into our custody will have been thoroughly vetted. What that means is that everyone participating in the ecosystem knows that the organisations that they're trading with, they know who they are, and they know that the assets that they're trading with are completely clean. So really important for us. This is a professional asset class, and it needs to be treated that way. Suitable for high-frequency trading, it's suitable for all trading actually. The initial focus for us is on 6 initial cryptocurrencies. It's the 6 that you would imagine. Initially 4 fiat currencies, US dollar, euro, yen, and Swiss francs. those are both our starting places. We'll increase both on the digital side and on the fiat side according to client demand. We're not quite sure what the next level of currency demand will be. So we wanted to start with this initial tranche and add as we're requested. But again, and it was interesting to hear Ted talk earlier, just there's a lot of demand, but it needs to be thoroughly vetted because we don't want to touch coins that we aren't completely certain about. And speed, I mentioned earlier, is so important. So our systems have been built with speed in mind. All sorts of technology has gone into that, both behind the custody, making sure the safety is there and the speed is there as well. And from our perspective, the right risk is actually to have no risk, other than the risk that an organisation willingly wants to adopt, and that's all about the volatility. So this is a very volatile area. That's why it's interesting. So an organisation looking for a very low risk asset class, this is not that. It's volatile, which is what makes it interesting. But what we want to do is to take away everything else that would be a concern holding back an institution from participating in this space. So the focus is on managing out the risk behind the asset class, making sure there's a safe place to keep your assets, making sure that when settlement happens, it goes through in the way that you would expect it to go through, taking away all of the risk behind that, making sure that in the unlikely event that anything untoward does happen, insurance is there, insolvency protection is there, the highest possible standards on KYC and AML, and making sure that from the start we're operating to bank-grade governance. So we're now, currently we have an EMD agency license. We're applying for an EMI license. We want to do that for a number of reasons, not least because our Day 2 service will be to facilitate intermediary investors providing fiat currency payouts, should they wish to, through us. But also because we're proactively seeking regulation, and then finally to move to actually seeking regulation and become a bank later on in early 2020. And in our governance model, we're making sure that we're following the 3 lines of defence that you would expect to see. We have our internal, our external auditors, full transparency, publishing our assets, making sure that everyone is very aware of what we're doing and that we're doing it in the right way that would be expected from an institutional perspective. And it's all about symbiotic partnerships. It's about working with the exchange community. It's working with institutions. And in doing that, really driving up that liquidity, which is what's so needed in this area. And where are we? We're working very heavily, very fast, talking to the community, building our solution. So far, we've identified 370 institutions' funds that have indicated to us that they want to enter into the digital asset world. So 370 that we've identified already. We're in deep discussions with 30 of those. And those 30 today represent $5.5 billion of liquidity, $5.5 billion that they want to put into this asset class as soon as they can find a way of doing that, that in a manner that would meet their needs. So from our perspective, there's a tremendous opportunity here. We're incredibly excited. We're really thrilled to be here today in Jersey because it does sound like there's so much happening. It was so interesting to hear Steve and Ted talking about what's happening in Jersey. And actually, you're such a lovely example in Jersey of you're doing it, you're not giving it as much PR as perhaps you might wish to. And that's so much the opposite of what we normally see. So I applaud you for that. But huge opportunity. We want to seize it, and I hope you do too. So thank you very much. And any questions if we have time?
Yep.